Yes, ma'am.
Okay, fine. So today's topic is sales tax. Okay, we are going to start with sales tax.
Okay, ma'am.
Yeah. See, first and foremost, sales tax. What is sales tax? It is an indirect tax which is paid by the ultimate customer on sale of goods and services. Okay, just a second. So sales tax is an indirect tax levied on sale of goods and services, and basically it is administered by local tax authorities. Okay, like who is going to govern about sales tax? The local tax authorities, because when we talk about taxes, taxes are handled by whom? It is to be handled by income tax authorities. Okay, and individually there are like on a like what to say, area wise basis, there can be local tax authorities who are going to administer this sales tax. Okay, just a second. Now next thing, how is sales tax collected? So we will check this example and we'll try to understand what's the concept of sales tax. Okay, so first and foremost, it is cumulative tax. What do we understand by the meaning of cumulative? That means at every step it is getting added. Okay, so sales tax is a cumulative tax collected at various stages during the life of goods and services. Like when we talk about, suppose we will take example of a manufacturer. So what a manufacturer does, he makes goods. Okay. So this manufacturer, he will make good, or we can say he will produce goods. Okay. So here one example is given that this manufacturer, he is purchasing raw material and the price of that is $40. Now sales tax applicable upon this is 15%. Okay. So 40 into 15% is how much? That is $6. Okay. So ultimately this particular manufacturer, he has to pay a total price of $46. To whom? To the supplier. Okay. Am I audible, Hamsika?
Yes, ma'am. Okay, ma'am.
Yeah. So $46 is to be paid by the manufacturer to the supplier. But among this $46, $40 is the price of raw material and $6 is the sales tax. So the sales tax will be ultimately paid to the local tax authorities. This is not the income of the supplier. Supplier will get an income of $40. $6 he is collecting on behalf of local tax authorities, which he later on he will deposit. Okay. Clear?
Clear, ma'am.
Yeah. So now coming to next step. So definitely manufacturer, he is not going to sell the particular product directly to the ultimate customer. So there are certain like middle persons involved. So the next in the line is wholesaler. Okay. So now the manufacturer is selling the completed television to the wholesaler at a price of $200. Now upon 200, 15% is $30. So ultimately the wholesaler is paying 230 to the manufacturer. Okay. So 230 is paid to the manufacturer by the wholesaler, but in this the price element is $200 and the sales tax element is $30. Okay. So up to this level, we understand that the local tax authorities are to be paid a tax of $30. Okay. Now, in this $6 is already paid by the manufacturer. So ultimately, the manufacturer will hand over to the tax authorities how much amount? 30 minus 6, that is 24. Okay. So 24 is to be handed over to the tax authorities by the manufacturer. Why? Because 6 has already been paid by him. Okay. Now next in the line is the retailer. So wholesaler is purchasing the television at $230, paying 30 as tax element. Now he will sell the particular television to retailer at $320, and upon this 15% is to be paid as sales tax, and that will be $48. So ultimately the retailer has to pay to the wholesaler $368. The retailer will pay to the wholesaler $368. Okay. Now among 368, 48 is the amount of sales tax and 320 is the price. So till this point, total amount of tax to be paid is $48, among which 30 has already been paid. 6 by the manufacturer, okay, 24 by the wholesaler, okay. So ultimately this wholesaler will pay to the tax authorities the remaining amount, that is 48 minus 30, okay. So 18 will be paid by the wholesaler. Now next in the line, the retailer has purchased the television, okay, and ultimately the retailer sells the television to whom? He sells the television to the ultimate customer. So retailer has paid a price of 368. Now he will sell the television to the ultimate customer at 480. So in this 480, 72 is the amount of sales tax. Just a second. So 480 into 15%, that is 72. So 72 will be the amount of sales tax to be paid by the customer. Okay. Now the customer is paying a price of 552, which comprises of 480 as the price of television and 72 as the tax. Okay. So now customer has purchased the television and we understand the whole amount of 72 has been paid. Now in all these transactions, who are the people involved? The manufacturer, the wholesaler, the retailer, and ultimately the customer. Okay. So manufacturer has paid how much? He has paid a $6 of sales tax. Sorry, supplier. Supplier has paid a $6 of sales tax. Manufacturer has paid a $24 of sales tax. So till this point, $30 has been paid. Then wholesaler has paid a $18 of sales tax. So till this point, $48 has been paid. Then ultimately retailer has paid a $24 of sales tax. So till this point, $72, which is the ultimate amount of sales tax upon this television, has been paid. But what we understand from this example, that this $72 has been paid by whom? This has been paid by the customer. Okay. So that's the reason we say this sales tax is a cumulative tax. Why? Because it is paid step by step, okay, by each and every person who is involved in this particular transaction. Okay, so sales tax does not affect the statement of profit and loss. Why? Because when we will show in the statement of profit and loss as an income, suppose we are preparing the statement for retailer. So retailer will show his sales as 320, not as 368. Why? Because $48 is not his income. That is to be handed over by him to the tax authorities. Okay. So that's the reason this sales tax is not going to have any impact upon the statement of profit and loss. But one more thing is to be made clear. If it becomes irrecoverable, that means like this retailer, he was not able to recover this $24 from the purchaser. So in that scenario, definitely he may show this as a loss. Okay. But is simply being collected on behalf of tax authorities. Basically, this middle persons, what they are doing, They are only acting as a we can say lineman or as a middleman who are collecting the tax on behalf of the income tax authorities. Okay, and ultimately this $72 upon this whole transaction goes in the hands of local tax authorities or income tax authorities. Is the concept clear?
Yes, ma'am, it is.
Okay. Now I'll tell you about the two types of sales tax. So one is input sales tax and another one is output sales tax. So input sales tax is tax on purchases and output sales tax is tax on sales. Okay. So basically, who can charge this input sales tax and output sales tax? For that, we have to remember that you need to register your business under sales tax authorities. So registered businesses charge output sales tax on sales, as I have explained here, and they suffer input sales tax on purchases. So like suppose Mr. X. So Mr. X is a businessman. So definitely he will purchase goods and he will sell good. Okay. So on purchase, he has to pay input sales tax. On sales, he will collect output sales tax. Okay. So input sales tax is paid by him. Output sales tax is collected by him. But this collection is not for himself. He is collecting this for income tax authorities. Not income, sorry, we can't use this term income, but sales tax authorities. So he is collecting this tax for sales tax authorities. So as we have seen in the previous example, the tax element is to be shown separately because that's not our income. Clear? Okay. Output sales tax is less than input sales tax in a period, the tax authorities will refund the difference to the business. Now, this particular statement I'll explain. Like when we purchased, we made a payment of $60 as input sales tax. When we sold the goods, we collected a payment of $40 as output sales tax. So what we can see from this, input sales tax is more than output sales tax. So in this scenario, we will get a refund of $20 from the tax authorities. Clear?
Yes, ma'am.
Okay. Now, so sales tax charged on goods and services sold by business are termed as output sales tax, and sales tax paid on goods and services by the business is termed as input sales tax. Now, example above assumes, so in this previous example with which we started this lesson, we have seen now that the supplier has paid input sales tax of $6. Manufacturer has paid input sales tax of $24. Wholesaler has paid an input sales tax of $18. And retailer has paid an input sales tax of remaining amount 72 minus 48. Okay, that is 24. So the retailer has paid an input sales tax of 24. Is this clear? The supplier has paid $6, manufacturer $24, wholesaler has paid $80, and the retailer has paid $24 from the previous example.
Yes, ma'am, it's clear.
Okay. So these are all sales tax registered traders. Why they were able to pay this tax and collect tax on the next step? Because they were registered traders. So in order to charge sales tax, a business must be registered for sales tax. So this is a compulsory thing. If you want to show sales tax in your business, you need to get it registered. So sales tax registered trader must carry out the following tasks. In that scenario, once he is registered, he can charge sales tax on goods and services at the rate which is prescribed by the government. So in our scenario, in our context, we are seeing that the rate prescribed by government is 15%. Okay. So this will be termed as output sales tax. Then he can pay sales tax on goods and services purchased from other business. So likewise, as he is collecting sales tax from people, from customer, he also needs to pay sales tax to the supplier or to the person who is like before him in the line of business. So that will be termed as input sales tax. Okay. Now, ultimately, pay to tax authorities is the difference. So we have seen a refund scenario. Now here we'll see a different scenario. The person, the business person, like again, we'll take example of Mr. A. So Mr. A is a business person and he has made a sales and he has collected an output sales tax of $100. Okay. Now he somewhere definitely he has also purchased goods. For that he has made a payment of $60 as input sales tax. So his obligation is to pay $100 to the income tax authorities, out of which $60 has been already paid by him. So how much he need to pay to the income tax authorities ultimately? Can you tell me?
40.
Good. So $40. So pay to the tax authorities the difference between the sales tax collected on sales and the sales tax paid to the supplier for purchases. Okay. So $40 is the remaining amount which is to be paid by Mr. A to the tax authorities. Okay.
Yes,
Now
ma'am.
this was a simple concept. Now what if something recoverable? So definitely output sales tax is to be collected by him now. What if the customer has not paid the sales tax element, or sometimes in the business, we know the business involve risk. So with this risk, we can say the customer has gone insolvent. So definitely when he is insolvent, he will not be able to make payment. So in this scenario, some sales tax becomes irrecoverable. Okay. So where the sales tax is irrecoverable, it must be recorded as part of cost of the item purchased and included. So basically, in the initial pages, we have seen that sales tax doesn't have any effect upon the statement of profit and loss. But if it is irrecoverable, definitely it is going to have a effect upon the statement of profit and loss and ultimately upon financial position. So whenever sales tax is irrecoverable, it has an impact upon SOPL and SOFP. Okay. So we will check those circumstances. So there are some circumstances in which sales tax paid on input cannot be reclaimed. Okay. Like first scenario is when the trader is not registered for sales tax. Okay. So when the trader is not registered for sales tax, or that inputs are not related to taxable business activities, definitely he can't collect sales tax. Okay. So this is referred to as irrecoverable sales tax. So in this cases, the trader must bear the cost of sales tax and account for it accordingly. So what is this paragraph trying to say us? That like the person, Mr. A is the business person, na? He is not registered. Okay. So when he is not a registered trader, he can't collect. So he can't collect sales tax. Okay. But from the person from whom he is purchasing, he is a registered trader. Like he is purchasing from Mr. B, the supplier. And the supplier is a registered trader. So definitely the supplier will collect the income, collect the sales tax, and Mr. A has to pay the respective amount. Okay. But he is not able to adjust that particular amount because he is not registered. So in this scenario, he has to bear the sales tax element. Is the example clear?
Ma'am, could you repeat it once more?
See, Mr. A, we are talking about two traders. Mr. A is the trader, Mr. B is the supplier. Mr. B is registered. Okay. So when he is registered trader, definitely he can collect in sales tax upon his goods sold. So he can collect output sales tax. Okay.
Yes, ma'am.
But Mr. A is not registered. So definitely he can't collect output sales tax. Okay. So ultimately, whomever he is selling goods, Mr. A, the sales tax is not collected by him. So ultimately, he must bear the cost of sales tax, and accordingly, this particular thing will come in SOPL. One example is given in the book also. I'll explain this example also. So first of all, this particular simple example is clear.
Yes, ma'am, it is.
Now, we will go with the book example. If a business pays $500 for entertaining expenses and suffers irrecoverable input sales tax of $75 on this amount, that means business has paid $500 but was unable to collect $75 out of it. So total of $570 paid should be charged to SOPL as a expense. So this is expense, we know. So this will be shown in SOPL definitely. But this shouldn't be shown in SOPL. But since it is irrecoverable input sales tax, we have seen the effect of irrecoverable input sales tax that once the sales tax becomes irrecoverable, it will definitely be shown or it will be charged against the profit in SOPL. So total amount of $575 is to be shown in SOPL as a expense. Is this particular example clear?
Yes, ma'am, it is.
Now, similarly, if a business pays $5,000 for motor vehicle and suffers irrecoverable input tax of $400, so in that scenario, basically cost of motor vehicle in the book we should show 5,000, but since 400 is irrecoverable, now we'll show the value of motor vehicle as 5,400 instead of 5,000. Clear?
Yes, ma'am, clear.
So these are the two scenarios which to make the concept clear that how irrecoverable sales tax is having an effect upon SOPL and SOFP. Okay, so first example was for SOPL because it is with regarding to expense. The second example is for SOFP because it is with regard to non-current assets. Your tangible non-current assets chapter is done, na?
Yes, ma'am.
So I hope then you in that scenario you know that non-current assets are to be shown in SOFP. Okay, so that's the reason instead of showing 5,000 as cost of motor vehicle, we'll show 5,400 as cost of motor vehicle. Why? Because this was irrecoverable input sales tax. Clear?
Clear, ma'am.
Now next thing, inclusive and exclusive of tax. So like we also, whenever we purchase certain thing, we see now that whatever has been charged to us, suppose you went to a shop to purchase a air conditioner. Okay. So when you are purchasing this AC, the cost of it will be shown as like say 50,000. Chalo. This I am showing in terms of rupees. So suppose 50,000 rupees is to be paid by you for the cost of air conditioner. So this includes what? This includes all the taxes also, because when we check this amount, it says that it is inclusive of all taxes. Okay. So this 50,000, that means we are the ultimate customer and the amount of tax element has been taken from us. Okay. So now we'll understand the concept of inclusive and exclusive of tax. Inclusive means that is here tax element is included. Exclusive is tax element is not included. Okay. Now, so the gross amount of a sale or purchase is the amount inclusive of sales tax. Like suppose if cost of a particular thing is $100 and tax element is $15. So if we show a cost of 115, this will be termed as gross amount, and gross amount is inclusive of sales tax. When we say net amount, so net amount is $100. So that is exclusive of sales tax. That means tax element is not present there. Okay. So here the same example is given. $100 is the net amount. If we add the sales tax element, we get the gross amount. Okay. And to make the concept more clear, they have given one formula also. Net amount is equal to gross amount. So how can we find the net amount? That will be equal to gross amount divided by 1 plus tax rate. So what was the gross amount? That was 115. If we divide it by 1 plus 15, 1 plus 15, we get the net amount. Okay. So that is the formula
Okay.
to collect. Here example is also given, like if gross amount is $80, rate of sales tax is 15. We find, in order to find that amount, we'll write gross amount divided by 1 plus tax. So tax is how much? 15.15. So 1.15, 80 divided by 1.15, we get 69.57. When we find the difference, this is the amount of sales tax, 10.43. Okay.
Ma'am.
This formula is clear?
Ma'am. Ma'am, so sales tax would be gross amount minus net amount, ma'am?
Yes, sales tax will be gross amount minus net amount. Okay. Now we'll check the accounting entries for sales tax. So basically we know now this is not going, first and foremost, this is not going to have any effect upon SOPL. But we will record sales tax definitely, because sales tax charge on sales is collected by the business on behalf of tax authorities. The business is only a link, we can say, which is acting on behalf of tax authorities. It doesn't form part of the revenue of the business. So as I have said you, whatever we collect as income, sales tax is not our income, not our revenue. Like a business sells goods of $600 and tax is $90 upon this. So business is getting a payment of $690, but they will record a sales of $600 only, because 90 is not their income that is to be paid to the tax authorities, which is to be shown separately. So journal entries are like whenever we are making a sales, entry will be sales increases our asset. Okay. So cash is increasing, or suppose if it is a credit sale, it will increase our receivables. Okay. So that's also an asset. So either cash will increase or receivables will increase by how much amount? 690. But among this, our revenue is how much? Our revenue is only $600, because this $90 is to be paid to tax authorities. So that will be shown separately as sales tax control account. This kind of, we can say it is a liability now for us. Okay, which is to be paid to the tax authorities. Now, if input sales tax is recoverable, same, the cost of purchase should exclude the sales tax and be recorded net of tax. Like suppose, so this was a sales element when business is selling goods and collecting. When business is purchasing good and paying tax. So in that scenario, they are purchasing goods on credit $400. So increase in liability. So that's the reason credit payables by how much? 400 is the cost of purchase, and we have made a payment of $60, okay, to the supplier. So 460 is the total payment made to the payables. Among this, purchase is how much? Purchase is of $400 only, and the amount, the difference amount, that is the tax amount, will go to the sales tax control account. Okay, so debit sales tax control account, which is $60. So when we have made a payment of $60 and we have received or collected a payment of $90, so ultimately to the tax authorities, how much we will hand over? We will hand over the difference amount, that is $30. Clear?
Yeah, ma'am.
So if input sales tax is not recoverable, now this is scenario when it is recoverable. Okay, that means we paid $60, we received $90. So $30 difference amount we are paying. What if it is not recoverable? So in that scenario, the cost of purchase must include the tax. So in that scenario, will not show the sales tax control account. Okay, so in that scenario, we'll show the cost of purchase as $460. Why? Because the $60 is irrecoverable. Okay. Clear?
Ma'am, could you repeat the irrecoverable, that part once again?
Yeah. See, I said that when the input sales tax is not recoverable. Okay. Here we have recovered the amount now. Here we have recovered the amount of $90. But what if the sales tax is not recoverable? That means $60 we are unable to recover. Okay. When we have made a sale to certain person. So in that scenario, instead of showing a purchase of 400, we'll show a purchase of 460, including the $60 as tax element also, because that is a loss for us. Okay. So
Okay,
in
ma'am.
that scenario, the business is the one which is going to bear the cost of tax. Clear? See, when we purchased, we made a payment of $60, okay, as tax. So we have to recover it from whom? From the customer, no? This $60 is to be recovered from the customer. But when
Yes,
we
ma'am.
made, so this was at the time of purchase. But when we made a sale, we were unable to recover the $60. Okay. So in case of sales, this $60 was irrecoverable. So in that scenario, instead of showing a purchase of 400, now we'll show a purchase of 460. Okay. So the $60 additional is to be borne by the business itself. Okay.
Yes, ma'am.
Yes. Definitely clear na Hamshika, or else I should explain again.
I'm clear, ma'am.
Clear? Okay. Now, how the sales tax comes into this books of prime entry like cash book, sales book, and purchase book. So here one example of cash book is given. So this format is known to you, sales day book format.
Yes,
We
ma'am.
have to show date, then invoice number, the name of the customer, and total amount. So in this total amount, 200 is the sales income. So 200 is our revenue. Okay. And this $30 is sales tax. So this is not our revenue. So that's the reason we'll show it separately. Okay. Now what's the scenario of purchase day book? So same, when we are purchasing it from certain merchants or certain supplier. Okay. So in that scenario, this is a mistake. They shouldn't write it as customer. They should write it as supplier. Okay. So now we have purchased certain goods from a Spiler. Okay. So we had made a total payment of $184, but we understand that among this 160 is only the cost of purchase, 24 is the sales tax. So that is to be shown separately. Okay. Now, when receivables pay what they owe or payables are paid, there is no need to show the sales tax in an analysis column of cash book. Now, when everything is proper, receivable has made the payment in sales book, we have shown a sales tax of 30 now. And this 30 we have properly received from the receivable. Okay. This 30 amount we have received from receivable. Okay. And here this 24 amount we have paid to the supplier. So in that scenario, when the receivable have paid what they should pay, when we have paid what we should pay to the payables, there is no need to show the sales tax in cash book. Okay. However, sales tax charged on cash sales or sales tax paid on cash purchase will be analyzed in a separate column of cash books. So this is because output sales tax has just arisen from cash sale and must be credited to sales tax payables in ledger account. Similarly, input sales tax on cash purchases having just arisen must be debited to sales tax payable. So the effect will be different now when we are collecting output sales tax on cash sales, that will be credited to sales tax payable ledger. Okay. When we are paying input sales tax, that will be debited to sales tax payable ledger. So only in this scenario we come to know about the difference which is to be paid ultimately to the tax authorities. Okay. So that's the reason we'll show it in cash book. Okay. Whenever there is cash purchases or cash sales. Is this point clear?
Clear, ma'am.
Now, so the receipt side of cash book might be written up as follows. So here one example is given how to show this sales or cash tax element. So like 230 we have like sold to someone. So 230 has been shown in sales ledger. We have again sold 660 worth of good to someone. 660 has been shown in cash ledger, sales ledger. Now, So these are what we understand as the name. These are receivables. So till now we have not got the amount. So that's the reason we are not showing it in cash sales. Now for cash sales, we don't write the name of that particular person. So 322 has been made as sales, out of which 280s are revenue. 280s are sales income. And 42 is our output sales tax. Okay, so 42 is what we have collected on behalf of tax authorities. So that's not our income. Then again you get merchant 184. So this will be shown in sales ledger only. And again there's a cash sale of 92, out of which 80s are income and 12 we have collected on behalf of tax authorities. Okay, so 54 is to be shown separately apart from 360 because 360 is our revenue, or we can say it's our income, but 54 is not our income. Okay.
Yes, ma'am.
Now, same way when we are showing the payment side of cash book. So we have made a payment to this merchant. So when it is payables, we'll show the amount only in purchase ledger. But when it is telephone bill paid, that means this payment has been made in cash. So we have to show separately that the cost of telephone bill was 120 and $18 was tax upon this. Okay. Now again cash purchase of stationery. So again this is also cash purchase. So $40 is to be shown as the ultimate purchase cost, and $6 is to be shown as sales tax. And ultimately sales tax paid to tax authority is 1400. So 1400 is to be shown because we have paid in terms of cash. So 1400 has to be shown as in payment, as a payment. Okay. So that is the payment side of cash book. Now next is payables for sales tax. So an outstanding payable for sales tax will appear as a current liability. So in our example also I said na, whenever something is outstanding payable for sales tax, that means what we have to pay. Like again I'll repeat the example, output sales tax collected is $100, input sales tax paid is $60. So that means $40 is yet to be paid. So that will be shown as current liability. So this is outstanding payable. Okay. So outstanding payable for sales tax will appear as a current liability, and current liability where we show it in SOFT. Okay.
Yes, ma'am.
Now, basically the payment is made on quarterly basis. So the sales tax paid to authorities each quarter is the difference between input sales tax on purchase and output sales tax on sales, just like the previous one. So if a business is invoiced for input sales tax of $8,000 and they charge output sales of $15 on its credit sales and sales tax of $2,000 on its cash sales. So in that scenario, like when we are preparing this sales tax control account, we know now we debit it with the amount of payables. Okay, that means debit it with the amount of input sales tax. How much is that? 8,000. 8,000 already we have paid. Now how much we have collected? 15,000 on receivables and 2,000 on cash sales. So we have collected a tax of 17,000, out of which 8,000 has already been paid. So 17,000 collected. 8,000 collected means that is on we can say output sales tax. 8,000 already paid, that is input sales tax. How much we need to pay to the tax authorities? Difference amount, that is 9,000. So 9,000 will show as payment to authorities. Is this example clear?
Yes, ma'am, clear.
Now, so payment to authorities will not generally coincide with the end of the accounting period of a business, because we understand na, sometimes we purchase more but we are unable to sell the whole stock. So whenever we are not able to sell the total inventory, it remains as closing inventory. So in this kind of scenario, what happens? The input sales tax can be, in this kind of scenario, input sales tax can be more than output sales tax. Okay. So
Okay,
if this balance is for an amount payable to authorities, the outstanding payable for sales tax will appear as a current liability in the statement of financial position. So occasionally business will be owed money by the tax authorities. In such a situation, the sales tax refund owed by the authorities would be a current assets. And sometimes when we in this scenario, definitely like we have made an input payment of 600, okay, but we have received the output sales tax of 60. So in that scenario, 40 we have paid excess. So this we have seen that the income tax authorities will refund. So whenever this excess is paid by us, we will get a refund from the sales tax authorities, and this will be shown as current assets. So here this, until unless this is paid, it is a current liability, and this 40 excess which we have paid, this will be shown as a current asset, because this we are going to get as a refund from the tax authorities. Both current liability, current assets are clear?
Yes, ma'am, they are.
Okay. So that was all about sales tax. Okay. Clear?
Yes, ma'am, clear.
So like we are done with this particular lesson. So tell me, Hamsika, each and every point was clear. Now I was able to make you understand the concept of sales tax.
Yes, ma'am. Ma'am, I have a doubt, ma'am.
Tell me.
Ma'am, isn't sales tax mandatory?
Yeah, see, again, sales tax is mandatory. Why? Because definitely the government is giving you certain benefits. No, government is, because of government only we are able to do businesses. Okay, and government also requires some kind of revenue. Okay,
Yes, ma'am.
so the sales tax is kind of revenue for the government. Okay, so that's the reason many businesses, they get themselves registered under sales tax authorities, because only registered businesses can collect sales tax. Okay, so they need to get themselves registered, and then they will be collecting the output sales tax, and whatever they have paid as input sales tax, difference amount they will hand over to the tax authority. So in this scenario, we can say that it is a mandatory thing which is to be done. Okay.
Ma'am, if it's mandatory, why is it irrecoverable in few cases?
It becomes irrecoverable. First reason for this is the person is unregistered. So when you are unregistered, you can't collect sales tax. So in that scenario, you are incurring a loss. Okay. So this loss is to be borne by you. So
Okay.
this is the first scenario. Second scenario, sometimes the customer to whom we have made the payment, to whom we have sold goods, so he become insolvent. So when he is becoming insolvent, definitely he can't make payment. So in that scenario also it becomes irrecoverable. Okay. So these are the scenarios upon which the tax becomes irrecoverable. Otherwise, so these are not like a daily phenomena. This is something which happens once or twice in a blue moon. Okay.
Okay, ma'am.
So now everything is clear?
Yes, ma'am, it is.
Okay, Hamsika. So we are done with the class for today. And if you have any doubt, you can once refer to the recording also.
Okay, ma'am.
Okay. Thank you.
Thank
Bye.
you, ma'am.